Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we are going to be talking about taxes. Specifically, is it possible to use your tax bill alongside your credit cards to generate some serious outsized value? That's exactly what we're going to explore. So we'll cover all the taxes and a few different methods of how you might want to go about this, as well as some things you need to know. So if that sounds interesting to you, then go ahead, press the subscribe button. Let's get to work. Now, first things first, of course, obligatory disclaimer. Just a guy on the internet, not actual tax advice. I just think it's a law that we actually have to say this or something, or it seems that way. But anyways, when it comes to taxes, there are a few different taxes, right? You have, your federal taxes, your state taxes, your city taxes, potentially depending on where you work and how you're set up, and then local taxes, kind of like property taxes, if you will. So we're going to cover all of those in order and then end with some best practices and some use cases. Now, first of all, why would you want to do this? Well, when it comes to credit cards, you know how it works here. You have to put spend on the credit card, and that's going to generate you your rewards points, your miles, hit a sign-up bonus, what have you. Well, a lot of times your tax bill could potentially be a big or significant charge. So, if you're a veteran of the game or you're just a newcomer, you look at it like, I have an expense, I have a credit card. These two things might go together and help me generate some maximum value. And you'd be correct. There definitely is a potential for that. So starting out, we're going to take a look at federal taxes and see how it works, then we'll work our way down the list. So when we talk about federal taxes, these are, your income taxes that you have to pay to the IRS. So on screen here, you're going to have how it works. Now, the short answer of it is, to get right to your point, can you pay taxes with a credit card? The answer is yes, and you can do that because of something called the Taxpayer Relief Act of 1997. Now, this act allows us to pay the IRS with a credit or debit card. And don't write off debit cards just yet, because they will come in handy potentially in our use case scenarios. Now, the IRS has 3 payment processors: Pay 1040, Pay USA Tax, and ACI payments, and that's at the time of taping. Obviously, in the future, this may change. Now, why exactly does the IRS have payment processors as opposed to just taking our money for themselves? Well, originally when this came about, it's my understanding that the IRS was not allowed to charge additional fees, right? And, when you pay with a credit card, there's usually some processing fees that go along with that. So their way around this was to contract with these payment processors. And I will stop to say a lot of this I'm pulling from a Doctor of Credit article. So credit where credit is due. I will link to that down below in its entirety. So credit where credit is due. Now, again, it's really easy. When you have a federal tax bill, you simply go to the IRS's website, and they have links for all 3 of these payment processing networks that you can go and use. Now, of course, it does cost money. There is that payment processing fee. So let's take a look at what each one of these guys are charging again at the time of recording in early 2022. And so here we have it. These are the payment processor fees. So you've got the processor on the left, debit card, credit cards, and then digital wallet. Now again, don't write off debit cards just yet. You can see a lot of these debit cards are kind of a flat fee, but the credit cards is the one you're probably most interested in. So you can see there's definitely a minimum charge for all of them. But then overall, the lowest charge here is going to be 1.87% of the amount you pay. So if you pay $1,000, it'd be 1.87% of $1,000 would be your charge. Again, one other thing to note here with fees is that if you're going through like a tax software or something like a TurboTax from Intuit, for example, sometimes those softwares offer you the option to pay through them, but the fees will probably change. It's almost positive that they will charge more than this. Now, these fees for these payment processors aren't actually that bad, because generally when we're talking about credit card processing fees, you're up in like the 3 to 4% range. So anyways, that is your federal taxes. Pretty straightforward, to the point. Yes, you're allowed to do it, and that's how you do it. Just navigate to the site, make a payment like you normally would. It'll more walk you through what information you need to put in. Now, another thing to remember here, though, before we move on, is that some payment processors can have caps on the amount of payments you make. So you might have 2 or 3 cards you're trying to hit minimum spends on or something. You just be aware that, some of them, like, hey, you can only make 3 payments and then you're done. So, pay attention accordingly, I guess. Maybe you have to use one and then jump over to the other payment network, if you will, or just send in a check for the rest. So you do have some options there. Now, continuing on down the list, after federal taxes, you have state taxes. So I live in Michigan, so you're going to pay your federal to the IRS. Your state, you will get paid to Michigan in my case. Now, I found an older link, like from 2016 actually, that said about 40 or 45 out of the 50 states did allow you to pay your taxes through a credit card. So it's pretty old, but With this, you just want to check your local state site and they'll have a section for taxes. So you take a look here. I'm just using Michigan for the example, and you can see here on screen, Michigan 1 does accept credit cards. And number 2, you can see the fee they're charging is 2.35%. I'm now moving down the list, city taxes. Not everyone's going to pay city taxes, and it might be called something else where you live. But for example, I'm an employee of a company based in Detroit, Michigan, and how it's set up is if you live in Detroit, you have to pay 2% city tax. If you just work, like you commute to Detroit, work in Detroit, then you have to pay 1% city tax. Total ripoff. You don't get to vote or anything. They just charge you a tax. Now, I know from experience, Detroit does not allow you to pay taxes with a credit card, debit card, anything. In fact, I think I owed them $20 last year, and I phoned up, said, hey, how do I get this money to you? They're like, you can mail in a check or you can walk in a check. Those are your 2 options. So again, the smaller you get, I would say you have less options usually, but again, there's so many cities in the state here, in the country here. Just check with your local city if this applies to you. This didn't used to apply to me in other jobs that I've had just in Detroit so far. So with that, we move to what I'm going to do is the last tax, and this is your property taxes, and property taxes are kind of for your house. If you own property, you're going to pay them to your local municipality, right? A county, if you will. Now, again, this kind of follows the city guidelines and the fact that, some of these counties are very small. I think there's over like 4,000 counties in the United States overall. So, a lot of these counties can be very small. It can be very hard, very tech challenge, I guess you will. So your options may vary, but again, the best practice is you're going to get a bill in the mail for your taxes. It should tell you how you can pay, or you can phone up and like, hey, what are my payment options? Some of them I've seen don't accept credit cards, but they do take debit cards, and we're going to talk about that in a second. Okay, so now we've answered the question, can I pay my taxes with a credit card? Federal level, yes. State level, more than likely. City level, debatable. Local level, also debatable. Maybe you can get lucky. Let's talk about use cases. First of all, when does this make sense? Well, again, the common theme here, as we've seen, is that each one of these payment networks charges a fee. On the low end, we saw 1.87. On the high end, just for me in Michigan, we saw 2.35%. Which means most of your cards, it's not going to make a ton of sense, right? Because you're really going to have to deal with like that catch-all category. So if you took something like the double cash or the active cash, it's going to get you 2% back on all purchases. Yeah, technically 2% minus 1.87%, you're still in the positive there. I don't know if it's totally worth it. It could, but if it's a hassle, I guess, I don't know if it's totally worth it, I should say. But you'd still be generating something. And in the case of Michigan, that 2.35%, definitely not worth it. Because there's very few cards that are going to give you, that much back to make that 2.35% worth it. You're looking at something like, Chase Inc. Premier card is a 2.5% on purchases above $5,000 potentially, something like that. So when we talk about why you would want to do this, it's really a few different things. Number one is hitting minimum spends and sign-up bonuses. If you're going after a sign-up bonus and it's a quite steep sign-up bonus, maybe it's like the business platinum card that needs like $15,000 and spend a year in 3 months to hit that, that's a little bit harder to hit for a lot of us. And you're still going to pay a 1.87% fee over here, but you're still going to make so much more in membership reward points that it probably doesn't matter. And again, if you transfer those membership reward points out to somewhere else for travel, you could easily be in the 2 to 3 cents per point valuation, making that 1.87 not that huge of a deal, especially if you really had no other way to hit that sign-up bonus. Another thing you could do is certain hotel cards is where you see this the most at. Hotel cards will say, if you spend X amount of dollars in a year on this card, we'll give you a free night certificate. And some of these, they don't necessarily cap the property level, or the property level is so high up there that you can get some serious value from these certificates. Now, again, you have to be someone who's going to stay at these places anyways, and know how to value it. Then it could make sense to, put your taxes on there, and the difference between that payment processing fee versus the amount that you get for the room, that could make sense as well. Now let's talk about two other ways here. The debit cards, again, you wouldn't want to use your real bank ATM card, but what other people like to do, especially for property taxes that, they may not take credit cards, but they might actually take debit cards. What you can do is, a fan favorite is the Ink Cash. I talk about the Ink Cash a lot, and it's a Chase business card that gives you 5% back at office supply stores. This is important and relevant because office supply stores sell Visa Reload cards. Visa Reload cards are basically debit cards. You flip them over, scratch off the back of it, there's like a PIN number and everything on it. So what you could do is you wait till Staples or Office Max or someone is running a sale where they're going to sell you a certain amount and then waive the activation fee on those. Activation fee is usually like $5 or something like that, so it really cuts into your money. But if you wait, buy a lot of these, kind of load up throughout the year, you'll be ready for your property taxes, and you can call in and say, hey, I have a debit card, and sometimes that goes better than having a credit card. Again, you're just going to want to check, phone up your local municipality, treasurer, state office, whatever it may be, like, hey, do you take debit cards? And there you go. Then you're going to get basically 5% back, and you've avoided the activation fees on that. Again, you also just want to ask them, how many payments are you allowed to make, so you don't miss your cap, and you can budget accordingly. Another way we can do this is with Plastiq. Now, Plastiq is one of the higher processing fees that we've seen. Plastiq charges a 2.85% fee at the time of recording, and what Plastiq does is, if you're unfamiliar, you run your credit card through Plastiq, you're making a payment to Plastiq, then Plastiq cuts a check and sends it to wherever you want that check to go. So in this case, you'd be sending it to maybe your local municipality or your city or what have you. That can work too. It's a little bit higher of a fee, but overall, those are really the three scenarios that I could think of. And then the last thing to mention here is more so super not tax advice, but when you fill out your tax forms with your employer, right? A lot of you can choose how much you claim there, how much you want the IRS to withhold, right? You can put like 0, 1, 2, or 3, and it's supposed to be depending on like how many family members you have or like people you're responsible for. I think again, this is why it's not tax advice, but if you are someone who's thinking of doing this and you routinely want to be able to pay the IRS with credit cards, you may consider going in and adjusting what you withhold and how much you have the IRS withhold from your check versus how much you have to pay. Generally, they withhold more, you have to pay less, or sometimes you even get a refund. Now, a lot of people, we like them to withhold more because it's very painful to write that check at the end of the year, which definitely makes sense. However, technically, if you want to just put it at an objective level, it kind of makes more sense to have access to all of your money up front so you can do more with it and then cut the check at the end of the year because you've been able to almost take advantage of that opportunity cost, if you will, if you had more money versus less. Now again, a lot of us don't do this because that check is just painful to write, and describing it as we're getting a refund is much more fun than writing a check. So that's something else to consider if you want this to be a strategy as well. But overall, that's how you do it. It's pretty easy and straightforward. Just stick to those three scenarios. Always run the math, see what kind of value you're getting versus those processing fees, and you should be good to go. So anyways, guys, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, and consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday. And of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. My question for you guys is, let me know if you've done this before. Do you normally take advantage of these kind of strategies? What kind of rewards and outsized value have you gotten, or has this proved to be more of a headache and you tend to just cut a check at the end of the year? Love to hear your thoughts and experiences on that. Anyways, guys, that's going to do it for this one. As always, thank you so much for watching, and I'll talk to you in the next one.